Good day, and thanks for joining us for the Purdue University CME Group Ag Economy Barometer survey results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you some of the highlights of the November 2021 survey. The Ag Economy Barometer declined 5 points this month to a reading of 116. That's down from 121 last month. And the index of future expectations and the index of current conditions both declined as well, as producers continue to be less optimistic about what's taking place on their farms, not only today but in the future as well. The Farm Financial Performance Index did improve slightly this month to a reading of 106 compared to 104 last month, and that was the result of a small increase in the percentage of producers expecting better financial performance on their farms. The percent expecting no change actually declined a little bit. The Farm Capital Investment Index declined again this month to a reading of 39. That's one of the lowest Farm Capital Investment Index readings we've gotten since the start of the pandemic. Supply chain issues are still a concern among producers. 44% of producers said low farm machinery inventories impacted their machinery purchase plans. Rising farm input prices are clearly an issue in agriculture. In this month's survey, 55% of the producers in our survey said they expect to see farm input prices rise 12% or more over the upcoming year. We followed up in this month's survey and asked farmers what their biggest concern is for their farming operation in the upcoming year. 47% of the producers in the survey said their biggest concern is higher input cost. Despite the ongoing weakness in farmer sentiment, farmers continue to be relatively optimistic about farmland values. The long-term farmland value expectation index did decline this month 3 points to a reading of 158 from 161 a month earlier, but that means that index is still very near its all-time high. We continue to ask corn and soybean producers about their expectations for farmland cash rental rates in 2022. 52% of the producers in this month's survey said they expect to see higher farmland cash rental rates in 2022 than in 2021. That's up from 43% that felt that way last month. Once again this month, we asked farmers who had had some discussions with companies about leasing their farmland for solar energy production what rates they were offered, and the rates were quite varied. 25% of the producers said they were offered a rate of less than $500 an acre, and 34% of the producers said they were offered a rate of $1,000 an acre or more. If you look carefully at the results this month versus the results we obtained back in June and July, it looks like there is some movement towards higher solar leasing energy rates. That wraps up the results for this month's Purdue CME Group Ag Economy Barometer survey. You can get the complete report and more details available at our website, purdue.edu/agbarometer. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.